All right, let's get started. First, welcome to our Insurance Tech webinar. I'm Lane Janee, part of the growth team here at CV Insights and your host for today. A few housekeeping items before we get started. First, if you're having any technical issues, your best resource is GoToWebinar Help. If you're still not able to see or hear us, don't worry. We'll be sending a recording of the webinar after the live event. The QA portion of this webinar is at the end, but feel free to send us your questions throughout the webinar. You can ask questions by submitting a question through the question box on the right side of your screen, and one of our analysts will respond. We're going to do our best to get through as many questions as possible. You can always join the conversation on Twitter. We'll be monitoring that as well using the hashtag InsureInsights. So a little bit about Matt. Matthew Wong, our presenter, is a research analyst at CV Insights, where he produces data-driven analysis and research reports on private company financing, exit and performance trends across emerging industries, geographies, and investors. His research focuses on financial technology, digital health, ed tech, on-demand, and of course, insurance. Before CV Insights, Matt completed short stints covering startups and venture capital at Dow Jones VentureWire and Inc.com. Matt's published industry research and analysis have been featured in the New York Times, the Wall Street Journal, the Financial Times, Bloomberg, CNBC, and Reuters. He has appeared on Bloomberg TV, Al Jazeera, and BNN. Matthew is a graduate of Northwestern University. So now, without further ado, we're going to turn it over to Matt.
Great, thanks, Lady. Great, so let's get started here on the Insurance Tech webinar, sort of FinTech's Next Frontier. So we're going to be covering a lot of different things today, including sort of a data-driven look at the trends, emerging technologies, and how incumbents are responding in the growing insurance tech landscape. Before we do that, I'm just going to quickly go through a little bit of what we're doing here at CV Insights. So we're backed by the National Science Foundation and RSTP, and we use the data science and machine learning to help our customers predict what's next, their next customer, their next investment, the next market they should attack, the next move of their competitor, or the next company they should acquire. Here are a few of the people who have sort of allowed us to use their logos and show us a little bit of how they use us. So those are companies like Cisco, Salesforce, Dassault. You'll see on the right side, cvinsights.com/customer-love, and you can see how much of other VC firms, corporates, as well as service providers are utilizing CV Insights. So before we start, our mantra sort of throughout everything we do is taking a data-driven approach to the private markets, which have traditionally been very opaque. So here, our mantra really is sort of in God we trust, all others must bring data, and you'll see that weaved out throughout this presentation as we go through sort of the world of insurance tech. So the next 30 to 35 minutes, we're going to cover four main areas. One is sort of a look at, the financing trends to the global insurance tech universe. So, which are the startups that are receiving funding? What are the hot industries? And sort of what does the financing landscape look like for insurance tech? Two is how sort of big insurers as well as tech giants are responding to the insurance tech opportunity. So what are we seeing from firms ranging from AXA to Allianz, as well as companies like Google and Baidu, and how is this all coming together? Third, we'll do a quick case study on Google. So if we think of resource allocation as strategy, how have we seen Google move strategically within insurance tech? What are the moves that they've sort of made on the investment, partnership, as well as M&A side within the world of insurance? And lastly, we'll look at a few areas where insurance tech might be headed next. So what are some of the new things people are buzzing about within insurance tech, and what are we going to sort of look forward to in 2016 and beyond? The last thing we do before we get started is I just want to introduce Insurance Tech Insights. So that's sort of the first and only data-driven research publication focused on the emerging insurance tech industry. So from market maps to what the biggest insurers are doing to new life insurance startups, we're covering a bunch of different new areas within sort of the insurance tech landscape, and that's all available at cbi.vc/insurance-tech. So I'd encourage all of you to check that out after the webinar. Great, so let's get started with insurance tech startups invading the multi-trillion-dollar insurance industry. So we don't see the word trillion often when sizing the market opportunity for startups, But in some ways, it was sort of inevitable that startups would eventually target the sort of old, staid insurance business. So if you look at sort of global life insurance premiums, those total 2.7 trillion, and then non-life insurance premiums totaling 1.4 trillion. So given how big sort of the market opportunity is, startups are now more and more entering the insurance business. And one of the primary reasons why they're doing that is because of sort of the failure by insurance incumbents to create, compelling digital experiences for their consumers. So here, and you'll see in this chart, in terms of how satisfied, their online consumers are, insurance trails, way below sort of even personal banking as well as some of the other financial sectors. And you see that sort of borne out in terms of satisfaction by consumers of insurance services online. There's really been very little to none insurance, very little, insurance innovation from large providers. And now we're seeing venture capitalists very publicly talk about insurance tech disruption. So whether those are firms like Andreessen and Horowitz to smaller micro VCs, we're seeing this come from a bunch of different investors in the industry. Rivet Capital, which is a small firm based in the Valley, Mickey Malka, who runs the firm there, had a great quote that insurance won't get you a date, but it really feels like lending did in 2007. So that's sort of when Lending Club and On Deck Capital took their first investments. And they're spending 60% of their time in insurance. If you're at Money 2020 conference, you might have heard Vinod Khosla mention that insurance is still ripe for disruption. And you see a bunch of other firms here who are publicly blogging or tweeting about, sort of the insurance tech opportunity, from Bain Capital Ventures to others. And at the core, it comes down to what startups are going to be doing in this space. So this is a great quote from Policy Genius CEO Jennifer Fitzgerald, who mentions that in her previous life as a McKinsey consultant, she advised sort of the top insurance companies on projects that were at their core incremental. And now what we see is more startups, target this largely unsexy area and sort of find ways of reimagining what the insurance value chain looks like from a bunch of different areas, whether that's in claims, distribution, or risk. So when we look at the insurance tech landscape today, it's really broadened from just a few years ago, and whether that's in healthcare, auto, mobile insurance management, SaaS companies that are providing software for insurance providers, product insurance startups, companies that are providing commercial insurance or brokering commercial insurance for small and medium-sized businesses, new startups in the sort of peer-to-peer space, as well as on the life insurance side. So this is just a small cut of some of the startups that are now in the space, but you see how many companies are now entering the insurance business from the tech startup standpoint. And what all of that is doing is now bearing out in sort of the funding data. So here you see, the funding trend to insurance tech startups over time. And what we see here is that, in 2014, tech companies that have targeted the insurance space took less than $700 million in funding. And just in the first 9 months of 2015, we see that number has actually tripled in terms of funding to global insurance tech startups. You see the spike there in Q2 driven by a few mega rounds to companies like Zenefits and Zhongan Insurance in China. But I think more importantly, it's important to keep in mind that the deal trend is really hitting new highs, and that's probably the bigger trend to keep, that's more important to keep aware of, is just more deals happening in the sector and the deal activity hitting a high. Just quickly, we're going to be using this business social graph tool throughout the presentation. So this is a tool that lets you visualize the investment, acquisition, and competitor landscape of relationships between players in a space. So it makes it mapping an industry very simple in terms of companies partnering or investing or acquiring in others, and we're using that tool that we built here at CB Insights. You'll see that weaved in throughout the presentation. One way and one chart that we did illustrate that with is here in terms of the number of insurance tech investors increasing over time. So, in 2011, there were less than 50 investors across all types, angel, VC, hedge funds, and mutual funds invested in the insurance tech space. Now, fast forward through, the end of Q3, and we see that number increase to actually past 380. It's actually more today, and we expect that number, especially heading into next year, to increase substantially still. One trend we have noticed since 2010 is that, most of the insurance tech startups that have raised money since 2010 have focused on the health insurance space. That's probably not surprising given, the Affordable Care Act, which was signed into law in 2010, creating sort of new opportunities for consumer health insurance providers. So we've seen startups like Oscar, which are actually providing new health insurance, actually creating new health insurers. We also see a lot of companies on the brokerage side form in the health insurance space. So this, this chart has changed a little bit since we made it earlier this year, but most of the companies that have been funded in the space to date have been on the health insurance side. But now, with new companies starting up and eventually will be funded, we're going to see sort of much more movement on the life insurance side, on the property and casualty side, as well as others. So we expect this to change over time. In terms of sort of the share of deals to companies by stage, not surprisingly, most of the activity in the insurance tech space has been at the early stage. So 60% of all deals since 2011 have come at the seed or Series A stage. We've seen that deal share number sort of drop a little bit, but still well over half of all deals to insurance tech startups in the space have been at the early stage. Probably not surprising, and we'll probably continue to see that until companies can sort of gain enough traction to hit more sort of mid-stage fundings and eventually more late-stage fundings. But the early stage is where we think most of the attention should be focused in terms of the insurance tech universe. The reason why is because early stage activity gives a really good snapshot into sort of what to expect in terms of innovation in industry, say a few years down the line. So when we own in on sort of the early stage insurance tech investment trend, we see just the number increasing on an absolute deals and dollars basis to over 360 million in 2015 and over 40 deals. So with still a month still to go, those numbers are already at highs, and heading into 2016, it will be interesting to see whether this early stage funding trend continues. When we break those early stage numbers down by geography, we see that the U.S. has taken almost 3 of every 4 insurance tech deals. That said, there is a lot of activity in Europe, especially in the German and UK tech hubs. So we see Germany and UK sort of ranked 2nd and 3rd, rounding out the top 3. That said, there are a lot of early stage companies in both of those markets in the insurance tech space. So we expect to see their share of insurance tech deals grow over time. Within the U.S., we see that California has taken about half of all deals to insurance tech startups. New York has taken about 20%, 17% of all deals in the space, and Massachusetts sort of rounds out the top 3 at 6% of all deals. So this is how the geography for sort of insurance tech deals has broken down by geography in the U.S. Here, just a quick look at some of the most well-funded insurance tech startups. So Zhongan Insurance, which is that Chinese online insurance seller based on sort of the property and casualty space, and that was initially funded by Alibaba and Tencent, as well as you'll see others like Zenefits, Oscar, Collective Health, and Clover, all of which are focused on sort of the health insurance space, either as brokerages, tech solutions, or sort of health insurers themselves, in the case of Oscar, which has now notched a valuation over $1 billion. This is a quick tool that we made just this week in terms of mapping out sort of the insurance tech landscape. So you may have seen some of these periodic tables that we put out. We just recently put this out for insurance tech, looking at sort of 120 plus key players in the insurance tech space, ranging from startups to VCs to corporate investors and accelerators. So here you see just a number of different companies that are targeting, whether it's in term life insurance or property and casualty or health insurance, to new areas like peer-to-peer insurance. We've mapped out a little bit, and we're going to be updating this over time, and we'll be sending you this presentation after, so you'll have links to all of the materials that we put forth in the presentation. So given how much activity is now happening in the insurance tech universe, how are we seeing big insurance tech giants respond? And also, how are we seeing sort of big tech corporations like Google and others react to what's happening in the insurance tech universe? Well, what we see is that big insurance firms are aware of the coming change. So here are a few quotes from some of the biggest insurance firms out there. So Aviva CEO Mark Wilson recently said that insurance is in the Stone Age while other people are circling Mars. Generali, which is one of the biggest Italian insurance firms, Mario Greco, who's the CEO there, said that either you understand that insurance is going to change, or the industry will disappear. And then Progressive CEO Glenn Renwick, who recently said that we don't necessarily control the direction of technology. So the CEOs of the largest insurance firms are aware of this coming change. So how have they sort of responded to it? Well, one of the most clear ways we've seen that happen is through investments in tech startups. So whether that's AXA, MassMutual, Allianz, Ping An, Transamerica, and others, we're seeing a host of different insurance providers make investments into tech startups. So here you'll see the deal trend by insurance providers into tech startups, and it really jumped in 2014 to over 20 deals, and now over 30 deals in 2015 year to date. And that we don't expect that to slow down. We're now seeing more and more insurance firms who are thinking about starting a corporate venture arm, and a number of the firms that are now investing today actually made their first investment this year. So AXA, for example, set up their strategic ventures arm earlier this year, and we're seeing other firms like XL Catlin as well as Hartford Steam Boiler just get ready and get started this year in terms of corporate venturing. Here are some of the names I just mentioned. Again, we expect this to change over time because we're seeing more and more insurance firms express interest in corporate venturing. But already you see a number of different firms that are making investments today in terms of insurance providers investing in tech startups. What's interesting, though, is that when you look at sort of the investments by insurance firms into startups, most of them actually aren't focused on companies that are directly focused in the insurance space. So actually, most of the tech deals by insurance firms to date are actually going to companies that are complementing their existing businesses, whether those are on-demand roadside assistance apps, community coordination tools, cloud mortgage software firms, or others. Most of the deals are not sort of directly related to insurance. So, you can make the argument that, insurance firms aren't investing in companies that are reimagining what insurance looks like. That said, given sort of the amount of attention they've put on this area, it's hard to imagine that they're not aware of sort of the companies that are thinking about reimagining insurance. And we do see a few investments into insurance tech startups from insurance providers. So, we'll see if that changes over time. In terms of the partnership angle, we're seeing a lot of insurance firms look to partner with startups, especially on sort of the IoT world. So, in terms of, insurers are increasingly recognizing the potential of the Internet of Things on their core business, and we're seeing that bear out in the partnerships that they're providing. So, a few here that I'd note are, Google's Nest division, recently partnered with American Family Insurance just to help offset the cost of a Nest Protect smoke detector. We also saw Google partner with Liberty Mutual at the same time to sort of offer a monthly discount, and they have their program available in a number of states, including Alabama, Colorado, Illinois, and others. Others that we've seen is Progressive, which partnered with Sensio to power their usage-based insurance program, which is called Snapshot. So, the Snapshot app that they're building sort of helps automatically monitor and measure driver data such as time of day, mileage, hard braking, and potentially earn a discount through Progressive's program. Oscar did the partnership with Misfit, so they're basically paying their users to sort of use the Misfit, the Oscar Misfit, the Misfit wristband, and that connects automatically to Oscar's app. So here are some of the partnerships you've seen over time by insurance firms with IoT startups as well as bigger tech corporations. The elephant in the room, though, is that we're seeing more tech corporations themselves enter the insurance business. So this is a chart that Kleiner Perkins, Caulfield, and Byers made within their sort of internet trends report that they put out each year. So it's the list of sort of global internet public leaders by market cap. And what we've seen is that an increasing number of them are actually now stepping into the insurance business, right? So if you look at Google, Alibaba, Tencent, Baidu, as well as Rakuten in Japan, all of them have made strides into the insurance business. And here you'll see some of those specific moves that they've made. So if Google, which we'll dive into a little bit later, has made a number of investments and partnerships with various insurance startups, as well as launching their own auto insurance comparison engine. Alibaba and Tencent, were initial backers of a new online property and casualty insurer in China. Baidu, which just this month teamed up with Allianz as well as Hill House Capital to start their own insurance provider, is focused on sort of scenario-based insurance, which we'll dive into a little later as well. And Rakuten, which acquired Aereo Life Insurance, rebranded it as Rakuten Life, and is now sort of deeply involved in finance as well, and actually started their own fintech fund to invest in fintech startups. So you can imagine that maybe insurance might be a focus of theirs as they sort of look to deploy that fintech fund. So let's quickly look at Google and what the moves that they've been making. So, in 2014, Google co-authored this report with BCG that showed that, insurance is a top five product category in insurance usage. So, you know, Google sort of had a bunch of different conclusions from this report, but a lot of people were speculating, whether they would eventually enter the insurance business, given how much and how lucrative it is to their sort of search business. What we see is that Google has had a steady rise of insurance tech investments and partnerships over time. So let's quickly look at some of those that they've made. In 2011 they acquired Beat That Quote, which was a UK insurance price comparison site for 61 million. And then they started making a number of investments and partnerships with both startups as well as insurance providers. So they partnered with Vision Service Plan as well as AXA. They invested in Climate Corp, which was later acquired by Monsanto, and Climate Corp was a firm that was and still is, providing, automated crop insurance program for farmers based on actual versus expected weather data. And then, moving into 2015, we saw them launch their Google Compare auto insurance comparison engine with partners like Compare.com as well as CoverHound, which is a Bay Area-based auto insurance comparison and brokerage. And Google Compare just recently launched in Illinois. And then you see a few of the other partnerships and investments that they've made in 2015, including 3 different investments in sort of the health insurance space, including Oscar, Collective Health, and Gusto, which just recently moved into brokering health benefits 5 months after Google Capital invested in them. So, industry perspectives on Google's entrance have been mixed, but I think, the more important thing is to focus on the actions, right? So here you see some of the perspectives of different people within the insurance industry. So William R. Berkley of W.R. Berkley Corp. Mentioned earlier this year that, Google's competitive advantage can't be denied because they invested an enormous sum of money in actively building a rural roadmap of America, whereas on the other side, you see people like Bill Wilson of the Independent Insurance Agents and Brokers of America mentioned that, what Google is doing now has been done for 10, maybe closer to 20 years now. Despite the perspectives and what different people are saying, we think that it's important to focus on the actions because Google is likely positioning themselves for the long term, and we'll certainly be paying attention to all of these sort of partnerships, acquisitions, and investments they'll be making over time, especially as they pertain to insurance. So that's a quick look at what Google has done, and what they do in the future will be interesting in terms of how they position themselves because they are now deeply sort of making moves in the industry. So what are a few different areas that we expect insurance tech to move into next? Well, there are a number of different areas, and some of these are more buzzed about than others, but let's quickly look at a few of them. So one is blockchain, right? So if you look at this map of financial services firms investing in different Bitcoin or blockchain related startups over time, we see obviously a number of investments by banks like Goldman Sachs, Santander, and others, but we're also seeing now make investments like New York Life and Transamerica, which recently invested in Digital Currency Group, which is Barry Silbert's new effort, and they actually have their portfolio of blockchain investments themselves. So it's interesting that for New York Life and Transamerica, they get a view into sort of this portfolio of what's going on within blockchain and monitor that strategically. Lloyd's recently highlighted the potential of blockchain in insurance as part of its modernization plan earlier this month. And we're also now seeing, or starting to see, startups look to different applications within blockchain for insurance. So Everledger is one company. They went through Barclays Accelerator. They're using blockchain to sort of combat fraud, and they're starting with diamonds as sort of where they're starting off, but looking to expand into other use cases there. So blockchain is a sort of exciting area, but I think still extremely early for insurance firms to think about it, and also startups in the space that are targeting blockchain for insurance use cases. Another area where we see a lot of buzz is sort of this area of sort of on-demand insurance. So insurance enabled by smartphones and allowing you to get a policy on demand rather than sort of annual coverage. So what you're doing is basically slicing and dicing a policy into, say, for an hour for car insurance, or different types of ways to better utilize this. So if you think about the on-demand economy and what Uber and Airbnb have did in terms of getting, a ride or a place to stay or your laundry or food delivered in the click of a button. We're seeing insurance startups as well as efforts like what Baidu is doing with Allianz move into, and it's been given a bunch of different names such as episodic insurance or scenario-based insurance. Moving into that effort. So here you'll see some of them which we've highlighted. So Baidu and Allianz, you see how Baidu describes their program saying that scenario-based insurance will consist of small situational protection offered for high-frequency location-based or internet transactions such as OTA purchases, online to offline services such as dining, ticketing, and other transactions. And you see some of the startups here that are also focused on providing sort of on-demand insurance. So Sure is one company that is sort of deemed what they're doing episodic insurance. Kava is another company based out of Edinburgh, and you see a quote there that says, consumer expectations are that we should be able to get what we want, where we want, and from all our personal devices. Why shouldn't car insurance be any different? So say you borrow your friend's car for an hour, getting a policy for that time. And another company that you'll see there in the screenshot is Trove. What they're trying to work on is sort of swipe to protect. So, being able to swipe right with your finger and activate coverage on a number of different possessions that you have, and conversely, swipe your finger left to sort of turn off the cover. So startups as well as companies like Baidu are really sort of making this an interesting proposition. We expect that more startups will probably be focused on this as we move forward into 2016. The other area where we expect to see more sort of activity in the insurance tech ecosystem is companies that are building up these valuable data sets or have sort of a unique data proposition move into different insurance applications. So here we'll highlight two of the companies, and there are many others, but if you think about Orbital Insight, which is a company that's sort of utilizing satellite imagery, you can imagine that sort of with the data that they're gathering, and have at their disposal of sort of satellite imagery, that they can track places that are having natural disasters or hard to see areas for insurers to sort of better understand risk. And they've stated that insurance is one of the verticals that they'll be going after. CEO Jimmy Crawford actually previously worked at Climate Corp, so he has sort of an understanding of the insurance business, especially from a data standpoint. And then another program we'll highlight here is Beam Technology. So Beam initially started as a smart toothbrush, and now we see them move more into sort of an insurance play. So being able to track your oral hygiene stats and use that information to support a dental insurance plan. And that's now we're seeing companies like Beam move into sort of a prelude to an insurance business. So those sort of imagining new applications for insurance through different startups who may not have thought that they would be in the insurance space, but now we're seeing them move into that, and that's an area a theme that we're seeing more and more of. And lastly, I think one thing that we're seeing a lot of talk, especially from investors, is the full stack insurance startup, the full stack company. Obviously, this is extremely hard to do because of marketing costs, among other things. Geico spends $1 billion a year on marketing costs, and Alex Rampell and Andreessen Horowitz had a great segment earlier where he talked about, insurance firms finding, if you're going to go full stack, what is the wedge that you have into the industry? What is the unique sort of value that you're going to have to do that? Because as you see here, and this is sort of borrowed from a presentation from Mike Paulus at Andreessen Horowitz, most of the play we're seeing is on the broker side of the business, whether that's in life, healthcare, P&C, and others. And what are we going to see? Are we going to see companies sort of target the full insurance capabilities and not just broker plans? We see a few companies doing that on the peer-to-peer side in Europe, and we're seeing a little bit of that in terms of initiatives like Zhongan in China, Mass Mutual starting their own program with Haven Life. So that's that is a little bit different than what the startups are doing. Oscar in the health insurance space. But this is, I think, what investors and sort of people in the industry are worried about or are also thinking about is this going to happen? And it remains to be seen whether we're going to see companies sort of target the full stack approach versus more sort of brokerage-based startups. So that's what a lot of people have their eye on today. We'll end this by saying, I think growth in technology can tend to look slow, and then grow extremely fast. And I think we're going to see that in insurance tech is a lot of the solutions that are just getting off the ground today or starting next year, may eventually be brushed off or start small. But I think, eventually some will catch on, and those are the ones to pay attention to, because those are going to be the transformative businesses within insurance. And whether that's 5, 10 years, 20 years down the line, the insurance tech opportunity is alive and well today, and we're seeing that bear out in the data that we're tracking. So with that, we're going to move to questions. Here are just a few helpful links that I'll point you to. If you are a customer, definitely reach out to Jonathan McKenna or Anand here at CB Insights to get access to the underlying data. And then here are just a few links that we companies that we talked about or brought up today in the presentation. We'll be sending you the presentation afterwards. Again, I'm just going to mention that we have this new initiative called Insurance Tech Insights. It's a new vertical resource focused exclusively on insurance tech, as well as a weekly newsletter we put out every Monday. So I'd encourage you guys to all bookmark that and take a look after the webinar is over, because that's where most of the content as well as data that we're putting together will be disseminated at. So again, that's cvi.vc/insurance-tech. So with that, let's move quickly to a few questions. I know Victor from our team has been gathering a bunch of different questions, and you guys have been great in sending a bunch of them out to us. So let me see here. So what are some of the accelerator and incubator programs focused on insurance? So there are definitely a few that have gotten started. I'll point out a couple. So Global Insurance Accelerator is one in Iowa. They're working on their second class of startups now. In Europe, there's Startup Bootcamp Insurance, so they're, I think, just finalizing what their first class is going to look like, and they're based out of London. Both of which have seen, it sounds like, a lot of inbound interest from different startups for their accelerator program. And then we see a bunch of financial services firms, whether in insurance or outside of it, who are starting accelerator programs, all sort of different from each other, but AXA has AXA Seed, Allianz has their own digital accelerator, and I believe BNP Paribas also started an InsurTech-related accelerator program. We've also seen, a number of companies go through Y Combinator, probably most prominently Zenefits. So those are some of the insurance accelerators and incubators. Looking through the next set of questions here. What are we seeing in cyber insurance? So that's definitely a hot area that we're seeing a lot of discussion over. That said, we haven't really seen many startups target insurance from the cybersecurity standpoint yet. If they are, it may be, with grants or flying extremely low under the radar. But I think, one way we may see that bear out is if you think about Zenefits, which sort of monetize, basically an insurance brokerage business through selling software, we might see that happen in cyber insurance as well, with sort of cyber security companies using like an insurance product or insurance product to sort of underpin their business model. So that's one way we may see that bear, but I think it's still very early on the cyber insurance standpoint, but it's definitely an area we're going to be keeping keep a close eye on as we move forward. So I got a question here on what are some of the areas outside of insurance that insurance providers are investing in. So there are a few, definitely. Lending is a big area. So we've seen investments by insurance providers and companies like Prosper, Tuition.io, which is focused on providing sort of student loan repayments as a benefit, was just invested in by Mass Mutual. Lufax, which is going to go public, counts Ping On as a big backer. Others, include sort of the robo-advising space. So, Northwestern Mutual made investments in Betterment and then acquired LearnVest. But we're seeing others as well. So, AXA just invested in a company called B. That's sort of a replacement for a checking account. So it's across sort of the financial services ecosystem. So we see, insurance CVCs investing across sort of the fintech landscape. We don't have too much time left for questions, but I'll answer one or two more. Are there more innovation in particular geos? I think, a lot of the interesting innovations in terms of interesting business models or ways to approach sort of reimagined insurance applications are coming out of Europe. So I think, UK, if you think about, what's happening and I would say Europe overall, so Germany, UK, as well as France, you see companies working in peer-to-peer. And, that's to some degree that those are applications that can't really be transported over the US given sort of regulatory um, environment here and having to move state to state, different issues like that. So, I think we're definitely seeing a lot of innovation out of Europe. And I think part of that may be because, the insurance corporates in Europe are also very keen on innovation and fostering programs. So, sponsoring programs like Startup Bootcamp Insurance and also investing in a number of companies. So I think obviously most of the deal flow has come from the U.S. given the plethora of health insurance startups that have raised funding. But I think I'd say London and London especially and sort of the UK tech hub, we've seen a lot of innovation come out of. Um, let's see here. Um, so what about sort of self-driving cars and how that's going to impact insurance? It's a great question, but I think when we think about startups that are in the auto insurance space, the way they're thinking about it seems to be a little bit. I'll give one quote. I mean, I think Sensio, when they were asked, whether they're thinking about self-driving cars, they said that it's a long ways away. It's going to be a big shift, but it's still a long ways away. So they think the future is in, I think they said driver-based insurance rather than car-based insurance, and there's still going to be a lot of innovation on sort of models based on on-demand and others. So it sounds like, and Sensio just raised their Series A. So it sounds like, companies are obviously, I think, well aware of this self-driving car future, but to date, we haven't seen companies on the startup side, focus their entire business on the self-driving space, given how early it is still. So obviously, another area that we'll be keeping a close eye on. So with that, I think we're going to finish up. Again, definitely send our questions over. I'm at mwong@cbinsights.com, and you can also ping us on Twitter as well as email. And again, the new insurance tech initiative that we started is at cbi.vc/insurance-tech. With that, I'd like to thank all of you for joining us today. Definitely a lot happening in insurance tech, and we'll definitely be keeping a close eye and covering it with data and research. So thanks again.